back. You're watching Investors Guide. Dhirendra is still with us, and Avan is here to give us an introduction to the DSP BlackRock Tiger Fund. Avan.
If you're one of those sharp investors who study into thematic funds and invest wisely time and again, then the DSP BlackRock Tiger Fund is one sectoral fund for you. TIGER stands for the Infrastructure Growth and Economic Reforms Fund. As the name suggests, DSP BlackRock Tiger Fund invests in infrastructure and other associated companies up to 90% of its total net assets. The fund has outperformed the benchmark, the DSP 100, by a handsome margin in the last 3 years and has given an annualized return of 21% since its launch in 2004. This tiger's charm lies in its ability to protect the downside, which it did most recently in the first quarter of 2009, when the category average was minus 5.3%, and the fund managed to stay in positive territory with a return of 0.5%. But this fund hasn't disappointed during the bull runs either. Its annual returns have been at par with its category average. Energy, financials, and engineering are the sectors which are preferred in the portfolio at present. But do the numbers reflect similar optimism? If you invested 1,000 rupees in this fund when it started, you would have 3,847 rupees today. But let our experts tell you if this is the next fund that you should add to your portfolio.
Well, the Tiger Fund is largely an infrastructure fund. It hasn't been a good year for the sector or for the funds. Would you recommend this fund at all right now to investors?
No, I think, I've been, suggesting for a while now that keep away from thematic fund and particularly infrastructure fund, where a lot of investors came in till 2008. And this fund was, even among infrastructure funds, the number we have so far, we have quite a few. This fund was an outstanding infrastructure fund, so to say, till last year, not anymore. So I would say, at this one can say that it is average on the risk, average on the return, and I don't see anything turning around. It will happen sometime, but turning around for this sector or the funds or the infrastructure fund where their portfolio lies, I don't see a quick turnaround. It is disappointing, and it has been a while now. We have been waiting for the big turnaround happening. I would say take your money out, and it is proving to be hugely, not so great experience anymore.
All right, pull your money out of the DSP BlackRock Tiger Fund. But if I'm an investor who believes that the infrastructure story is still strong in India, and I want to be invested in that sector, can you name a couple of equity diversified funds that I can invest in who have strong infrastructure exposures, of fund managers who possibly will be able to give me that exposure as and when I need it?
I would suggest that, to overcome your need to have something which will benefit from the boom in infrastructure. As and when it happens, when the stocks, stocks become promising and they are likely to do well, your normal fund manager will do it. Until he finds that it doesn't look promising, it looks overpriced. It's a much hyped story. You don't have, if you look at all the infrastructure fund, it was able to strike a chord with consumers, investors. And it was sold as a consumer product that this is the story, we need infrastructure, and they hold promise. But it takes a lot of effort, a lot of other variables for it to happen. And your normal fund manager will do it, and he'll keep away from it.
Alternate fund that you can recommend to them then?
Choose, diversified equity fund from our growth portfolio. That should do your job. Fund managers will keep away from infrastructure when needed, and we loaded with such stocks when it's opportune to get into those.
All right, and finally, your rating of the DSP BlackRock Tiger Fund, should we be investing in it?
It's a 3-star fund, and even on a risk-adjusted scale, it is so. No, one should not be investing in DSP Tiger.
All right, the Tiger Fund, they're getting 3 stars on Investors Guide. Mr. Meghnathan Gopal is his name. He's 56 years old. He has savings of 20 lakh rupees in a bank fixed deposit, which he believes is secure and safe. He wants to know, are there any other instruments of investment he can use that will give him higher returns but continue to give him the low risk he gets from his bank deposits? Any other investment ideas you can give, Mr. Gopal, right now?
No, not really, because today bank deposits are yielding reasonably high return, and he can consider a mutual fund, the MIP, but that is not risk-free. It will come with like turbulence. So I think, he should carefully evaluate that his, money in bank deposit, and 10 years down the line, it will lose its, the value of the principal will be less going by the inflation. So now, has he done anything to protect the value of his investment? So from that standpoint, whether he keeps it separately of his 20 lakh rupees, I think, it's very important to have a small equity component, maybe, 5% to begin with and 10% over a period of time when he is able to create that surplus. Because 5 years down the line or 10 years down the line, when his 20 lakh will remain 20 lakh, the income from that 20 lakh will not be enough to support his income requirement. So beating inflation is important, which a fixed deposit won't. So, and assume little risk gradually. And no, there is no other guaranteed fixed income return which will yield higher than bank deposit today.
No fixed income return is higher than a bank deposit today. Unfortunately, not even the senior citizen savings scheme. Really, the bank deposit, if you want that kind of security, is your only option. But you could also consider the monthly income plans like Dhirendra suggested. A small portion of that money gets into equity, which means you have 10 or 20% risk from investing in an MIP. While that means a higher risk on your capital, it also means you'll be able to beat inflation slightly better in the long term as well. Those are your options, Mr. Gopal. Thank you for writing to Investors Guide. Dhirendra, thank you so much for joining us on the show and answering all of our questions. We look forward to sitting down with you again next week. So we took a quick break. On the other side, we answer more questions with Vishal Kapoor. Don't join us.